Hi everyone, what's going on? Welcome to the channel. I'm Shaq, level 2 mortgage agent, license number M22003943. And if you're a homeowner, investor, house hacker, real estate investor here in Canada, this video might literally save you thousands of dollars this year. Rates are finally dropping, and a massive amount of Canadians are going to be up for renewal this year and next year. But here's the truth. Most people are either going to overpay or they're going to miss on the opportunity to save and actually build wealth long term. So today, I'll be breaking down exactly what rate reset means for you, how you can realistically save, and how smart Canadians are able to protect themselves and grow financially. So you're probably wondering what is actually happening with rates here in Canada. Well, over the past few years, we've seen the fastest rate increase in Canadian history, where people were getting mortgages and renewing at 5, 6, or even 7% at top banks. But now we're seeing rates drop down to low 4s and high 3s, depending on the product. This shift is creating one of the biggest opportunities we've seen since pre-pandemic for renewals, refinances, switches, investment restructuring, and even debt consolidation. But rates don't drop forever. They move in cycles, and smart money moves at the start and not the end. So you're probably wondering, Shaq, how much am I actually saving when rates actually drop? And if you bought a house in the last 3 to 5 years, your rate is probably sitting at 4.8 to maybe 6.5% interest rate. Now rates have dropped anywhere, I've seen 3.9 to about 4.3%. So what does that mean for you? I'm going to make this super simple so it just hits home. So for every Bank of Canada announcement that you hear drops 0.25 points, that's about 1/4% That saves you anywhere between $13 to $18 for every $100,000 that you borrow. So on a 5-year term, that's basically $800 to $1,100 that you're able to save in 5 years when rate drops. So let me give you an example. Example number 1, $500,000 mortgage at 5.50. It's over $3,000 a month that payments you're going to make at 5.50. 4.25, that's about $2,700 a month. That's a savings of over $300 a month. And the span of 5 years of a 5-year term, that's over 21 G's saved. You know what you can do with 21 G's? That's a down payment on another property, guys. Literally. So these drops are massive for investors, massive for people who are looking to build generational wealth. Now, let me give you an example of a larger mortgage. Let's say you have a mortgage of $900,000. Literally, the payments are $5,500 and a 4.25 rate on a $900,000 mortgage. That's about $4,800 a month. That is a savings of over $650 a month. Again, do you know what you could do with $650? I know what I could do with it. Do you know what you could do with that? I know what smart investors are going to do with that money, because annually, that's almost $40K saved in 5-year term. Hopefully this is making sense for you guys, what you're able to save with these rate drops. All right. So to put into perspective and to summarize that up for you, every 0.25 basis points you see drop, again, anywhere between $13 to $18 a month that you're able to save for every $100,000 that's borrowed. So whether you have a mortgage of $500,000 or $900,000, you're seeing the massive savings of over $20K in a 5-year term. So when you hear the rate drops from 0.5 to 0.25 in the Bank of Canada for a real family with a real mortgage, guys, this can mean daycare. This can mean groceries. This can mean an extra car payment note that you're able to make. Literally, it's breathing room. And trust me, I understand the debt load and everything going on. We all need breathing room. The importance of this is wealth building is money that you actually get to keep. That's why rate reset is so important for us to talk about right now. So what's the biggest mistake that most Canadians are making? I'll tell you what the biggest mistakes that everybody's making in Canada, because I see it every single day. No review, no second opinion, no strategy, no nothing. And here's why that's a problem. Your bank offers you what works for them. My job is to show you what works for you. Most people don't realize they can save $300 to $600 a month, $20,000 to $40,000 in 5 years, and banks make billions of dollars a year because people skip this simple step. Don't let that be you. Here are 3 smart moves that you should be making during this rate reset. Number 1, don't just renew, restructure. Think of your mortgage as a fitness plan. What worked 3 to 5 years ago may not fit your life today. Maybe your payments are too high. Maybe you want to invest into more real estate. Maybe you're planning renovations. Maybe you just need more flexibility. In today's market, I don't blame you. This is the perfect time to reset your mortgage so it matches your goals, your lifestyle, and your future. Move number 2, if you have high interest debt, clear it. Credit cards at 9% or lines of credit at 9 to 12%, but new mortgage rates are actually at low 4%. It can free up you hundreds of dollars every single month. I'm going to show you how. $20,000 on a credit card debt costs about $600 a month. And that's how banks review it as well too. But if you roll that into a mortgage at, let's just say, a rate of 4.25, as we're using that number in our previous example, the cost is going to be about $110 a month. Now, think about this. If it's $110 a month, nearly that's about $500 of instant savings every single month. This is how families are able to get their life back. Move number 3, use your equity strategically. Your home should work for you, nobody else. This is your moment to use your equity wisely. Open a HELOC, invest into a property, add a basement unit if you have to, renovate it, put it on Airbnb, pay off high interest debt, build an emergency savings, and increase your cash flow. It isn't about spending money. This is about setting up the next 5 to 10 years to build your wealth through real estate. If your renewal is coming up anywhere between the next 6 to 18 months and you want to explore your refinancing options while rates are dropping, reach out now. Seriously, reach out now. The earlier we're able to check your file, the more money we can save you, the more money you're going to save long term, the more money you can put down to another down payment for another property. My booking link and application link are in the description. And before you go, subscribe. Hit that notification bell as well too. You don't want to miss out on these weekly videos we're dropping. I'm here to save hundreds of Canadians, if not thousands of Canadians, buy smarter, build real wealth, and create generational wealth for their families. So don't stall. Call Shaq. I'll see you in the next video.